And the new year 2022 has begun with new hopes and expectations. Some analysts are hopeful while others are cautiously optimistic about the year ahead. One such analyst is Ilya Spivak. He is head of Greater Asia at Daily Fix and he is joining us from San Francisco, US. Welcome, Mr. Spivak, and thank you for joining us. My first question to you is about Omicron. Well, tell us about what you think on Omicron fears and possible disruption it has been making now.
I think the biggest concern regarding Omicron has to do with further disruption of supply chains. It looks like the variant is cautiously a bit milder than, say, Delta or some of the earlier issues, but nevertheless, we've seen lockdowns spread, especially, for example, in parts of Europe. And I think how the winter goes will be very critical, in particular, in terms of further lockdowns, further disruption to economic activity, which I think might contribute to inflationary concerns and some of the stagflationary risk that we face in the coming year, whereby we might get a downshift in growth coupled with inflation that remains high and sticky.
So my next question to you, how do you expect the behavior as far as the new year 22 markets are concerned? Will the bull run continue as far as the Indian and global markets are concerned?
I think the macro backdrop is going to be the most significant factor. I think as we weigh what those macro factors are likely to be, the Fed is front and center. The Federal Reserve, of course, controls not just the cost of borrowing for the U.S., because the U.S. dollar is such a ubiquitous source of reserve and such a ubiquitous medium of exchange in global markets. We have from the Bank of International Settlements that the dollar accounts for close to 80% of global monetary transactions. So when the Federal Reserve raises the cost of borrowing, dollars, of course, it raises the cost of borrowing globally. I think as we find out that inflation is going to be stickier than some of the policy makers perhaps thought, and as we've seen them adjust their stance from mid this year going into next year, I think there's scope for them to continue to do so. I think that's the biggest hurdle for not only Indian markets, but generally riskier assets, including equities writ large. I think that's the biggest concern.
Mr. Spivak, cryptocurrencies was a dominant theme in 2021. What about 2022? Will it dominate the overall savings of people as well?
I think regulation is a very important theme going forward. I think, again, as we consider what the macro backdrop is, I think it's important to consider that cryptocurrency was really born in the era following the 2008 financial crisis, when interest rates fell to zero and in many areas even into negative territory, and have not really risen in any kind of meaningful way for almost a decade and a half. I think as we get to this inflationary wave here, and my expectation is that it's stickier even than policymakers currently acknowledge, never mind how much of this they acknowledged some months back. I think it's very important to consider that we are likely to see a shift in assets away from non-yielding alternatives and riskier alternatives in the direction of assets that are less risky and that confer yield.
Well, staying with crypto because it concerns a lot of our viewers, Bitcoin dominated most of crypto market last year. What about the new year? Will Bitcoin be again a dominant currency, or do you think other currencies will also dominate?
I think there are certainly differentiating factors between cryptocurrencies. Looking at something like Bitcoin, it is, of course, a first mover. It is thereby one of the dominant forces and a benchmark in the market. But there are others, for example, Ether, that offer something more of a tangible value proposition. Owning Bitcoin doesn't necessarily have an inherent argument for the kind of traditional fundamental value that investors might look at. I think Ether, in that it is a token on a platform for software development, makes that argument a bit more tangible. I think likewise, we have stable coins that purport to solve the volatility issues that we've seen in some of the other cryptocurrencies. Ultimately, though, I think the direction will be perhaps not necessarily in the coming year, but overall in the direction of gov coins. In other words, the application of crypto technology to things like the dollar, the euro. We've, of course, heard the Fed and the ECB, for example, already talking about developing a digital dollar, a digital euro. I think that's likely where the technology is heading, and those are likely to become more mainstream than the coins that we see in the space today.
And give us a sense of crude oil market expectations. We saw crude hovering around $80 to a barrel. There are hopes now, $100 to a barrel this year, 2022. What's your expectation there?
I don't think that it is very likely that we are going to get a push into the triple digits. It's certainly possible, but I think the likelier direction is that demand is actually going to moderate somewhat. We'll have to see how expectations of a very cold winter are going to overlay with this in the coming months. But overall, for the year, I expect that economic growth will normalize downward somewhat. Of course, a tighter monetary policy stance worldwide will likely contribute. The rising US dollar against that backstory is likely to contribute as well. Crude oil, of course, is denominated in dollars on global markets. And so I think the path of less resistance is actually sideways or lower for crude oil.
And the last question, what about inflation? Will it be a dominant factor this year as well, hovering on the minds of the RBI governor, in fact, the governors of other central banks?
I think inflation is going to be stickier than policymakers are even now acknowledging. I think we've seen, for example, from the Federal Reserve, a steady shift in rhetoric from about the middle of June through the end of the year, where they acknowledged inflation to be higher, to have gotten there faster, and to have been more sticky than they initially were expecting. I think that sort of adjustment in expectations is going to continue, because some of the things that we've seen against the backdrop of these rising costs over the past 6 months will not go away very easily. Supply chains, of course, will be mended over time, and that will be a bit of a relief, but contracts now being signed at these costs will make things sticky, likely for the next 6, 9, perhaps even 12 months. That includes employment contracts, contracts for deliveries, not just of inputs, but also of final goods. And so I think inflation will remain relatively elevated.
Thank Mr. Spivak for joining us today and talking to us about all these issues. Thank you once again. WION now available in your country. Download the app and get all the news on the move.